Good morning and welcome to the TD Power Systems Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devrishi Singh of CDR India. Thank you, and over to you, sir.
Thank you. Good morning, and thank you for joining us on this call to discuss financial results of TD Power Systems Limited for the quarter and year ended 31st March 2020. We have with us Mr. Nikhil Kumar, Managing Director, and Mrs. M.N. Varalakshmi, Chief Financial Officer from the management team on this call. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the financial calls have already been emailed to all of you earlier. I now invite Mr. Nikhil Kumar to provide key highlights of the company's performance for the year ended 31st March 2020. Thank you, and over to you, sir.
Thank you. Good morning, everyone. Thank you once again for joining us today on our earnings call. Let me start by discussing TDPS's financial performance for the year ended 31st March 2020. Standalone. On a standalone basis, our full year total income was 494 crores versus 456 crores the previous year. Profit after tax and other comprehensive income was 16.9 crores versus 6.97 crores. Full year manufacturing revenues is 455 crores versus 408 crores, an increase of 12%. Exports and deemed exports contributed 65% of manufacturing revenue without the railway business, and it was 59% including the railway business. Unfortunately, we lost around 30 crores of manufacturing revenues due to COVID-19 lockdowns and an inability to get inspectors to come to India or inspectors from India to come to Bangalore, starting from around March 10th. After that, we had trouble to ship out our finished goods, and then when the eventual lockdown started on 22nd of March, we had to close down our factory and everything came to a grinding halt. Manufacturing order book, including Turkey's operations, stands today at 1,107 crores. 306 crores is our manufacturing business, generator business, 715 crores is the railway business, and 86 crores is our Turkey business. Export and deemed exports, excluding the railway business, is around 66%. Order inflow. The order inflow for TDPS India for the current year was 468 crores. For the manufacturing business, for Turkey, we had 88 crores. So our total order inflow for the manufacturing business for the year ended March 2020 was 556 crores versus last year, the year before, of 484 crores. Our projects business, our full year projects business revenue was 32 crores versus 43 crores the previous year. The pending order for this segment is 22 crores. Consolidated. On a consolidated basis, full year total income, including exceptional items, was 542 crores versus 468 crores. Profit after tax, including comprehensive and exceptional income, 28.85 crores versus a profit of 2.9 crores the previous year. During the year, the company wrote back payables of around 12 crores in our subsidiary company, DF Power Systems. Our consolidated order book is 1,129 crores, which is manufacturing business, as I said to you earlier, was 306 crores. Railway business is 715 crores. Turkey business is 86 crores. And projects business is 22 crores. Now I'd like to talk a little bit about the market situation. So ever since the COVID-19 lockdown started, and we've had I would say, disruption in the entire business cycle across the country and also in the world. We have been trying to analyze the market and our position in the market more in terms of just two questions. What will be the impact of all this on the company's business for the current fiscal, that is FY21, and then what will be the impact on the company's business beyond FY21? Let me answer the first part of the question, or first question out of the two questions about this year's fiscal. So looking into the pending order of FY21, we were blessed with a very strong order inflow last financial year. We also had a spillover from last year due to the COVID-19 lockdowns of around 30 crores. But correspondingly, we have also seen after the lockdowns have been lifted that we have postponements up to approximately the same amount as the spillover that took place from last year. At the moment, we have no order cancellations. We have also observed that most of the postponements are from the Indian market, and we have negligible postponements from outside India. The good news is that our railway business for the Indian market is totally intact with the original projections which were there pre-COVID-19. So overall, we see that our business for FY21 is still stable at this time, and we still expect FY21 to be a very good year for the company. Of course, there is an impact from COVID-19, since FY21 actually was on track to be an exceptional year with greater than 25% growth, but now we firmly revised that growth to be around 16 to 18% over last year, including our business from TDPS Turkey. Regarding projections for FY22, we have seen that we still have some momentum from pre-COVID, and we have seen fairly strong order inflows in April and May. At the moment, we don't see much disruption from our business from international markets, and most of the pipelines that were there pre-COVID-19, most of the pipeline we see still intact. However, some of the sectors are really hammered, like the shale oil business, but lower oil prices means that we're seeing more engine business and we're seeing more gas turbine business. Overall, the net effect is positive for TDPS. They're also confident that Indian market will bounce back eventually, and it is not a question of all doom and gloom. We're also expecting the Indian Railways will expect the number of locomotives required by around 10 to 15% for FY22. Over and above that, our development and progress with new customers is still very much on track, and we will see good inflows from newly developed customers in FY22. In summary, we are overall very positive about FY22, but I also want to convey that we are still cautious about FY22, but at the same time, we are cautious, but we are very optimistic. As I mentioned earlier, FY21, we are extremely confident about hitting our numbers. So the guidance for FY21 will be guidance for FY21 manufacturing business, TDPS India, top line 480 crores to 500 crores, with EBITDA around 10 to 11%, TDPS Turkey, top line around 85 crores, and the total manufacturing business will be between 565 crores to 585 crores for FY21. The projects business will give a top line of around 35 crores. I would also like to say that in terms of the quarterly performance, Q1 in this financial year will be a washout since we have lost around 6 weeks. We were really able to restart operations only around May 15th, and it's only now that we see that the operations are in full swing once again. So effectively, we have lost 2 months. So Q1 will definitely be a washout. However, we are working around the clock to catch up, and we are very hopeful that we will catch up with our numbers by the end of H1. So we are projecting something like 65 crores business only in Q1, but we hope that, and we are pretty sure that we will catch up with numbers by the end of H1, somewhat similar to where we were last year. And then we see the real growth taking place in H2, where we have the pending order. This brings me to the end of my initial remarks. I'll now be happy to address any queries that you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself in the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Hello, sir. Good morning.
Hello, Kirti. Sir. Morning.
Good morning, sir. Hope you are all doing good, sir. How are you doing, sir?
Yeah, I'm fine, Kirti. All good with me. Thank you. I can hear you.
Okay. Sir, first is like you have highlighted that FY22 also you are being cautiously cautious. What is the rationale behind the choice? The voice got a little bit muted around that level. I missed that commentary actually.
No, what I said was that things are a little unclear. It's going to need. I said that on the international side, we're not seeing any slowing down of the pipeline. But definitely on the domestic side, we will need some little bit of time for the domestic market to pick up. But I'm confident the domestic market will pick up, and I'm confident that the economy will get back on track. It may take a little bit of time, but it will get back on track. So the cautiousness is just due to the fact that, we don't see that clear visibility, but there is a overall confidence.
Sir, just if you can highlight in April, May, how has been any order got finalized for us, or how has been the order flow for April and May, sir? Anything you can highlight?
Yeah, April and May, as I said to you on the speech, we have had a really good, strong order inflow.
Okay. Sir, in terms of the manufacturing activity, how has been, it has been a state government subject, how has been our throughput, sir, now, in terms of the factory utilization, or are we getting labor support? How has been the things at our factory shops, sir?
So we shut down the factory on March 22nd, along with the rest of the country. And then on April 22nd, we were able to get the permission from the state government to reopen the factory. We reopened, but unfortunately at that time we were not allowed to bring in workmen from neighboring districts where, since we are our factory is located at the edge of Bangalore district and Tumkur district. Most of our workmen and most of our employees live in Tumkur. Unfortunately, we could not get the permission for the people movement, although we had permission for the factory to open. So we ran the factory initially until May 3rd and May 4th only, with around 25% manpower, but we started the factory. Also, we were not able to get permissions for our suppliers to open. So anyway, we opened, we were able to push out some finished goods, and we were able to start some movement of some manufacturing activity. Things really picked up, I think, from 3rd of May, but even then, it's been a slow and gradual, I would say, return to normalcy. And now, you can say around this time, end of the month, in May, we have been able to ramp it back to 100%.
Okay. Sir, like earlier, if you see, our capacity was say 60% kind of 60% kind of utilization. So now factory utilization would have been at the full throughput, right, sir, to compensate for the lost output.
Yeah, basically we had to produce in 10 months. Yes. What was the plan for 12 months? Correct.
Correct, sir.
So in that sense, yes, and we're also saying that we are going to grow the business. So overall will be manufacturing turnover, including TDPS Turkey, will be up 16 to 18%. We're saying. Yeah. So we are we're going to be running flat out for the next 10 months.
Sir, Turkey, you didn't give the margins, sir. Turkey also similar margins, sir.
Yes.
Okay. Okay.
Maybe Turkey will be a little bit more margin compared to India.
Okay.
Definitely.
So basically, we should say around 60 crores kind of EBITDA you are looking at least on a base case.
Yeah.
Sir, in the cash flows, when we see, sir, we have seen a very good cash flow improvement in FY20. Given the situation, will we be able to maintain such a momentum in FY21 also, sir?
There will be an impact of having zero sales from 22nd March to maybe around 15th of May. Because that's almost, you can say, 60 days of zero sales.
Yes,
so down the line, 60 days later, which is say July, around middle July to middle August, we are going to suddenly find that the receivables are, there's no collectibles.
Correct.
To keep the factory running. We need to keep the factory running, and that's the time when we're also going to be having our maximum ramp up of production. So we have made funding arrangements. So I think we will talk to our customers and we will try to improve the advances a little bit. We have some increased bank borrowings. We have our deposits. So we have 178 crores of deposits. So financially, I don't think we're going to have any problems to fund our production, and we will keep the things moving.
Good, sir. Good to hear, sir. Thanks, sir. Congratulations for a great year, sir.
Thank you. Thank you, Ketan.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. So, FY21, because we already have good orders in hand, you seem to be pretty optimistic that FY21 will be good. But from your commentary, it also seems that FY22 will also see decent growth. So, any view on what gives you that confidence that FY22 will also be good for us? Apart from the locomotive business that we already have good order book for it.
So firstly, we are not so dependent on the domestic market. So if you look at, about 35% of our business comes from domestic to domestic, and say 30%, you can say. So even if that shrinks by 30%, the overall business will not be so much badly impacted. We are pretty confident that our export business will hold up, sustain, and grow. So we are not so dependent on India for our business, and that's why I have this optimism about FY22. But I'm not so pessimistic about India also. I think there is time, and markets will recover and consumption will return, because we have no choice in our country, but we have to get back to work, and we're getting back to work. And eventually, in about 2 or 3 months' time, I think people are going to forget COVID-19. And there's no way forward for our country. We have to get back to work. We can't have one more lockdown. So that's why I'm really confident that the country will bounce back, and maybe some effect could be there, but overall, I think we may not lose much business from domestic side also for next year.
Okay. And just coming to the segment by performance, as you had highlighted in last year also, that hydro will bounce back in FY20, and it has bounced back to FY18 kind of levels. And diesel and gas have also performed pretty well for us. So which segments will be driving growth for us in FY21 and FY22? If you can just share your thoughts on that.
FY21, this current year, it is definitely the gas engine business. It is hydro. It is railway business, and it is gas turbine business. And we will have a reduction on the steam turbine business. Mainly because there's going to be a contraction coming from India. So next year, we're going to see a revival of steam turbine, and we will see the hydro business is still going to be very, very strong. Gas engine and other things is very short cycle, so should remain stable, but I can't give such a definite projection about it at this moment.
Okay. And then for the traction motor segment, we have also highlighted that we are also in talks with more contracts from that segment, from our existing customer as well as from other customers. So any development on that front?
Talks are on, negotiations are on. That's all I can say. It's just been, everything has been interrupted from March 15th. Everything has been put on hold. So there's no progress to report from last time.
Okay. But the order size for this segment can be in line or less than what we currently have for that segment of 750.
Some of them are large. I think it's too early to talk about it.
Sure.
Negotiations are going on.
Sure. Okay. Thank you, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Thanks for taking my question and congrats.
Hi, Ravi.
On set of numbers. Hi, sir. Given the challenging times, congrats on good set of numbers. My first question is regarding which are the sectors from which you are seeing inquiries both in domestic and international markets?
I think it's the same old sectors, international business is still, it is biomass, garbage burning plants and things like that for steam turbines. And we are seeing gas engine business particularly is quite strong this year, and we also hope it will continue in the next year. Domestic side, as I said, is where we are seeing a lot of holds, postponements and things like that, mainly because one is that we see that because of the lockdown, many of our customers who may have had projects under construction and projects, all those construction activities would have come to a grinding halt. And for them to restart with all these migrant labor problems and things like that, it's really an issue where they've not been able to get the things back on track. So naturally, we are seeing postponement from the Indian side. But it could come back. The sectors in India, this is steel, cement, paper, chemicals. So it's all there intact, but it will take a little bit of time to recover.
So the inquiries from international markets, even during the lockdown phase, that is the past 2 months phase, has largely remained intact, and it's just that the
inquiries and negotiations have been taking place over phone and email and video conference. And the main thing is all our international customers, all our turbine makers, or all the international turbine makers or engine makers, none of them had to go through a lockdown. None of them shut down. They were all running. Maybe at, say, between 70% to 90% capacity. It's only in our country that we had this thing about this lockdown and this complete shutdown.
And in terms of pricing of orders, has it seen an improvement year on year or over the past couple of years? Has there been any?
So the past couple of years, yes, there's been an improvement, but at the moment, I don't think that anyone is going to. We can't go into the market demanding higher prices. So whatever benefits we get from the exchange rates, whatever benefit we get from the dip in the raw material prices that took place during the COVID-19, that benefit the company will get.
Got it, sir. Got it. Thanks a lot, sir.
Yeah.
Thank you. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, Nikhil. Hope you all are good. Yeah, hi, Nikhil. You're able to hear me?
Yes, loud and clear. Thank you.
Yeah. So, 2 questions. So, one is on the gas engine side. I think, we had, got entry into 2 new accounts in last 1.5-2 years on, in gas engine. So, how is the trial order going and, ramp up, and what is their feedback, if you can elaborate on that. And second question is on Turkey. So I think we did quite well in Turkey this year. We did around 86 crore business in Turkey. So, on that base, how does the, order book and pipeline look like, and do we anticipate any growth or at least maintaining this number on the Turkey side? These are the two questions.
Yeah, so Turkey, we have a really good year, but I don't think that we will be able to sustain that volume of business for FY22. Probably it may drop by about 25%. So it is still very much an incentive-driven market. So there is a regime of incentives which expire in this year, and the government has to extend the incentives. If the government extends the incentives, we will see maybe around 70% of the business in FY22. If the government does not extend the incentives, then we may see around 50% of the business, because we still have a grip on the market, and most of our customers will still continue with projects, and they will buy our machines whether we make them in Turkey or don't make them in Turkey. On the engine side, the development is very much in this. We have to deliver the first machine next month, actually this month end, June end, and its development is going on. We have 4 more engine types to supply by September. We will do that. I think by the end of the year, all our machines will be qualified, and then they will start quoting in all their projects, and we will see the business coming in next year.
So FY22 may see, the outcome of whatever that we supply this year in terms of either ramp up happens and how fast, right? So that's a fair assumption.
Yes.
Okay.
Yes.
Okay. Thanks. That's it from me.
Thank you. The next question is in the line of Manoj Dua from MD Investments. Please go ahead.
Good afternoon, sir. I missed the initial part of the commentary. What is the target for this year, and for the next year, what is the guidance for the sales for this year and next year?
Yeah, so manufacturing business top line from India, TDPS India 480 crores to 500 crores, TDPS Turkey 85 crores.
Mm-hmm.
So total manufacturing top line is 565 to 585, and project business is 35 crores.
Mm-hmm. Okay. And you've given guidance for the next year also? FY21-22?
No.
Okay. My second question is regarding waste to energy. Yesterday I was reading one news that NTPC has signed with EDMC for the waste disposal in Ghaziabad landfill. Actually, I know that's a government thing. What do you see in the long-term solution for this? And if the opportunity arises in this, are we in a segment which will apply to this segment? Are they below 50 megawatt?
Yeah, it is all below 50 megawatt. And
Okay.
if this segment really grows the way that we expect it to grow, there could be 500 turbines required. So
Okay.
it will be a big business for us and for Siemens and for Triveni.
Okay. So what do you see in this? Because I live near Noida and the Ghaziabad is near my village. It has become bigger than the Qutub Minar, the landfill. So how much time this municipality corporation can ignore this problem? And what do you see feedback you are getting from municipality or from Triveni regarding this?
We all are expecting this business to grow, but execution at the ground level is your guess is as good as mine.
Okay. Thanks.
Yeah.
Thank you. The next question is from the line of Nilesh Kumar from Bluefin Capital. Please go ahead.
My questions are done. Thank you.
Thank you. The next question is from the line of Anubhav Mukherjee from Prescient Capital. Please go ahead.
Am I audible?
Yes, very much.
Hello. Sir, the receivable absolute amount and also in terms of days of sales has improved drastically. So is this a trend that will continue because working capital had been an issue earlier you had pointed out. So has that trend reversed or is there some change in that?
So the moment, see, our marketing group has done a phenomenal job last year in collecting money and making sure that the cash flow for the company is improved a lot. So what we're seeing is, the result of their effort pre-COVID days. There could be some temporary disruption in that effort for some time, but overall, I think we are still putting a lot of effort to make sure that our collections and our receivables are under control for this year. They're doing I'm sure they will succeed, and I'm sure that we will keep things under control for this year. There's a certain amount of uncertainty for sure, because overall liquidity position is poor, at least in India. But from the international side, we'll get our money on time, so I'm not worried about that.
Okay, clear. And sir, if I look at the manufacturing revenue breakup, sir, even this year, the domestic revenue was almost half of the sales. So, firstly, given the domestic scenario, does it pose a challenge for growth going forward? And secondly,
no, you have to break it up. Take out the railway business from that, and then you will see that it is around 35%.
Okay. How much was railway this year?
45 crores.
And sir, what is it expected in FY21 and maybe possibly 22?
Around 90.
And 22 at the same level, or will it grow from there?
It should grow.
Okay. Thanks. That's all from my side.
Yeah, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. The next question is on the line of Manish Goyal from Anam Holding. Please go ahead.
Yeah. Hi, Nikhil. How are you doing?
Hi, Manish. It's been a long time.
Yeah. Nikhil, just a bit on steam business. I need more clarity on the outlook. You said in international you expect steam business to be little lower, or you meant for the revenue side or even on the order inflow side? And as well as the domestic also, if you can give a perspective for the steam business.
Revenue side definitely lower this year compared to last year. And on the inflow side, we expect a recovery to take place. But all the steam business that we book right now, we go for next year. Because it's about 8-9 months lead time, and we start getting into next year deliveries. But the outlook is not bad, but for this year, we lost the momentum on the steam side.
Right. Sure. So if you can break it up between international and domestic. So international, you mentioned that biomass and municipal solid waste will continue to do well.
Mm-hmm.
Okay. And in domestic, ideally, probably due to slowdown, you may probably see deferments or slowdown in inquiries. And
it should pick up again, Manish. But initially, right now there is definitely some slowing down, but we expect it to pick up and get back on track in a couple of months, 3 months from now.
Okay. And these first 2 months, you said order inflow was good. So was it largely from the international markets?
Yeah.
And you had inflows from steam as well?
I have not checked the breakup of that. Some inflows, yeah, from steam.
Okay. And on the gas engine and gas turbine related generator business is also looking fine for the current year.
Yeah, it's looking very good for this year.
So ideally, this this gas engines and turbines is ideally the demand is coming from the combined cycle power plants, or how is it?
Combined cycle power plants, also greenhouses in cold countries. Then there is emergency power. There's backup power. Yeah, backup power. Nobody burns diesel anymore. So all gas engines.
Right. And just sorry, I have not kept a track of it, but are you making gas engines or it's generators for the along with the engine?
No, we make only generators for gas engines. We don't make engines. We don't make any prime mover.
That and I have bit got confused on that. Wonderful, Nikhil. Great show. Thank you so much.
Thank you. The next question is on the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Sir, on hydro, how you see the FY21, sir, in terms of order flows and inquiries?
The hydro will still, this year will be a very good year. As I said, FY21 we have a very strong order book already on hand, and we still can book some smaller machines for the rest of the year. And there's a good pipeline for next year.
Okay. Sir, how has been any new customer has been added in this segment, or how has been our share movement, sir, with the customer?
Yeah, we have added. So we have come out of the FOIP agreement, and we are now free to work with all customers all over the world. So we have added a lot of new customers, and we have a lot of space to grow now in this business.
Okay. Thanks, sir. Thanks a lot, sir.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for their closing comments.
Yeah, thank you very much for joining us on this conference call. It's been a pleasure to interact with all of you. If you have any further questions, please feel free to get in touch with me or my management team. We look forward to interacting with all of you again at the end of next quarter. Thank you.